Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. This is the look ahead for earnings in the week starting Monday, the 25th of August. And certainly many will feel like earnings season is essentially done with over 95% of the S&P 500 having already reported. Now, there's a feeling that perhaps we can look back upon earnings season rather than looking forward to earnings yet to come. But this week is the outlier to that and could essentially provide the last bang within a fireworks display that has seen plenty of downside and a recovery within the last month and a bit. So, with the likes of Nvidia, Dell, and Salesforce all reporting, will this big tech focused week provide significant volatility for investors? So let's get into it. First and foremost, here is the breakdown for the current state of play for earnings season as we have seen it thus far. As you can see at the top left, 95% of the S&P 500 having reported, 79% of those stocks having beating estimates on earnings, just 60% beating on revenues. Typically, we do see outperformance on the earnings side of things, and that's exactly how it has played out thus far. You can see many of these sectors have seen 100% of their stocks having reported, but that is not the case for the likes of tech. We've got 89% having reported for tech. You've got consumer side of things, so cyclicals, 89%, non-cyclicals, 88%. So those are the areas where you're likely to see a focus. But certainly for this week in particular, there's a big focus on the tech sector. And the biggest of those will be Nvidia. Now, let's just go full screen on this so you can see exactly what we're talking about. Nvidia, essentially, here we can see that the outlook in terms of the annual estimation of where their earnings and revenues are going to go are particularly dramatic. I mean, you can look back to say 2020, where we were at 0.25 in terms of earnings per share, and you look forward to 2027, that's expected to come in at 531. Massive growth in terms of earnings, and a similar kind of thing in terms of revenues, down 16 billion per year in 2027, up to 229, essentially 230 billion. So massive growth expected. And you know, in some ways, this is the kind of thing that we can look at and say, okay, this is a great company to be investing in because we're expecting to see great growth. And we, understand the desire to really get on board a stock that has massive growth. But at the same time, it also sets a very high bar. And there are fears that once we do see a slowdown in terms of that pace of growth, then you're potentially going to see the wheels fall off in terms of the share price. So a lot of this is baked into the share price. In terms of expectations this time around, we've got 0.64 on the earnings per share expected for the second quarter. If we look at that compared to last year, 0.27. So more than doubling expected in earnings. And then in terms of revenues, 28.65 expected. You can see last time around, again, doubling and some. So 13.51 we were in the second quarter of 2023. Again, growth also on a quarterly basis. So a lot of these stocks are relatively cyclical in nature. So you see peaks and troughs throughout the quarters. That is not the case here. We're expecting to see growth every single time that we come back to the board for Nvidia. So a very impressive stock nonetheless. And it has been reflected by Wall Street analysts. You can see here the expectations are that we will continue to gain, with strong buys attributed by 18 analysts, 37 attributing a buy recommendation, and just 5 analysts providing a hold recommendation. 0 sells, 0 strong sells. And in terms of the sort of projections for where we could go from here, the most recent outlook has come from Rosenblatt Securities, 55% up from where we are at the moment. Now, that may not seem like that much to someone that's maybe trading penny stocks, but certainly if you're talking about a company around the $3 trillion mark, it's pretty substantial gains, to say the least. 40% expected upside for KeyBank Capital Markets. We've got a little bit more indecision with a couple more down there, but certainly plenty that expect this company to continue its upward trajectory, despite the fact that we've already seen massive gains in play. And that can be seen from the daily chart here for Nvidia. Here we go. So as we see here, the daily time frame shows you this big pullback that we've seen taking place over July in particular. August started off with the continuation of that, but we've really seen it bottom out and push onwards and upwards. You can see here perfectly touching and rebounding from the old trusty 76.4 Fibonacci retracement level. So once again, my favorite level plays out, and we can see here that crucially we broke up through it's just gone a 4-hour chart, your first swing high here at 120. That gave us the confirmation signal. And so we negated this trend where we were seeing this lower highs, lower lows, the rebound from that 76.4. I mean, you couldn't have it any more perfect, really. And then the rally up through that 120 mark. We're pulling back at the moment. Look, we're moving into a phase where we're expecting to see the Federal Reserve pretty much cutting rates every time around. That alongside in my mind, a soft landing. I don't think we're going to see a massive recession over in the US. So I think it's going to, tread pretty carefully and tread the line pretty well. So near term, we could possibly see a bit more downside, and certainly considering we've seen such a strong rebound, you can see, in terms of near-term price action, we have broken up out of that uptrend that's been playing out of late. So you can see here this intraday higher highs, higher low, the break through that trend line. And then we've seen a move tentatively through this consolidation support, which is around there. So this 126 support level. Some people say it's a double top formation. Well, it'll look a lot more dramatic if you put it on a 5-minute chart, certainly. Look like a topping pattern, and it can provide us with a breather for this stock. But nonetheless, a breather doesn't necessarily mean that we're going to see a massive top for this stock. So if we see some weakness, that's probably just markets being a little bit cautious for a company that has regained a significant amount of ground, and we have the risk of this earnings report coming out. But by and large, the growth of AI and the continued pumping of money from big tech stocks, in particular, big tech companies, into Nvidia to continue to push forth in this race to develop the most powerful AI solutions should mean that they continue to grow at a pretty impressive clip. If we look at where we were on previous occasions, you can see this is the earnings season for the prior quarter. We saw a nice jump, and we essentially pushed onwards from there. If we're looking at the time before that, we gapped higher and didn't fill it, pushed onwards and upwards from there. Let's see. Prior to that, we didn't see all that much. We saw a continuation. Prior to that, here we go. We saw a sort of gap higher, but then we refilled it, and then this ultimately provided a near-term top. So a little bit more mixed, but certainly the last two occasions we've seen a nice gap higher and a continuation, no closing of that gap. But look, near term, we're looking at the possibility of us rolling over for a short time. I don't necessarily think this will be protracted in nature. Let's just get the stochastic on and see exactly how momentum is playing out. So you can see that once again here. So we can see that break back down through that 80 threshold. So we're taking some of the gas out of the market. This essentially could give us a nice pullback leading into the report. And if we do see the report impress, then this retracement means that it's then gathered that energy once again to be able to push onwards and upwards from here on in. But certainly we'll attach greater importance to that upside move once we see a break up through that 130 mark, and that points towards a continuation of that move. Until then, we're sort of moving gradually lower. If we see a sort of zigzaggy move lower, then you're going to be looking out for that price swing high to break through. Remember, if we're looking out for exactly when that report is going to happen, it will happen on Wednesday, the 28th of August. And another company that will be reporting on the same day will be Salesforce. Salesforce are, well in the midst of some of the most notable areas of tech. If you're talking about the cloud, if you're talking about CRMs, you're talking about now AI. But by and large, it's not necessarily as fashionable as some of the other competitors, and its share price has kind of reflected that. Now, if we're looking at the trajectory over the long term in terms of its profitability, you can see here earnings per share currently at 8.22, expectation of 9.89 for the year, and then up to 14.76 for 2027. So still an expectation that we'll see some healthy growth over the coming years, certainly, because if you're looking over the course of, say, the period of 2017, which is 135, up to 2027, which is 1476. You're talking about a potential massive explosion in terms of earnings. And even if you're talking about from where we are last year, so $8 essentially, up to $14, you're talking about an almost doubling over the course of, say, 4 years. So that's still impressive nonetheless. But certainly, if you're looking out for, what their performance has done previously, what we might see this time around, you can see here as well the outperformance has been on a yearly basis has been consistent. You can see every occasion here we've seen. You can see at the bottom of that EPS section and the revenue section, all in the green, because we have seen outperformance versus expectations. Revenues are also expected to gain $51 billion, expected $34 billion for last year. Now, in terms of the quarterly figures, 235 expected on the earnings per share figure. That's up from 212 on the second quarter of 2023. So again, some nice growth expected there. 922 billion expected on the revenues figure. That's up from 860. So growth expected. You can see that the revenues figure provided a miss last quarter, but by and large, apart from that, we've seen strong outperformance, particularly on the earnings per share historically. So look back in 2022, we're talking about 15% outperformance, 23%, 11%. And, suddenly more recently, we're talking about 0.9% outperformance, 2.69% outperformance, 2.77. So we're seeing a slowing in terms of that outperformance on the profitability side of things. In terms of the breakdown for market expectations from Wall Street, you can see here markets are heavily in favor of this stock. 14 strong buys, 21 buys, 12 holds. Just the one sell recommendation. If you're looking at the most recent recommendations that have gone out there, you're looking at sort of market performs, outperform, buy, outperform, hold. In terms of projections from where we are at the moment, though, most of them don't necessarily, fill you with confidence that we're going to see massive move towards the upside, because you're looking at 3% higher, 7% higher, 15%, 1%, 22, -8%, 34, -4. So a couple of more optimistic outlooks in the middle there, but we don't necessarily see the same kind of optimism that we see for perhaps the likes of Nvidia, and that is by and large justified. And if you look at the share price, that really has played out. It's not necessarily the same kind of performer. Now, the share price itself, we can see here for CRM or Salesforce, you can see from a long-term perspective, we can see this big resistance level that essentially held. We tentatively broke through it and we've pulled back. Now, what we're going to be looking at for in particular around this report is how profitable the company is going to be able to become. And certainly there's been a big focus for the investors, some activist investors, putting the pressure on Salesforce to turn all of that growth, and in particular in the past, it's all been about growing through acquisition, and focusing instead on moving into a greater period of profitability. That is something that we need to see hammered home over the coming quarters. If we do so, then this pullback that we've seen recently looks like a potential opportunity for the bulls. You can see that we've come beyond that 76.4 fib, but you can see that long lower shadow before it. So we didn't sustain price action below that. We've then rallied, we've posted this higher low, and then we're pushing higher once again. The daily time frame shows you exactly how that played out. We saw the gap lower on earnings, and then we've been regaining ground. We've come into that prior low, so we've closed the gap, and that provides some risk for this stock as we head into the latest earnings season. We can see here 266 prior support on 2 occasions, the gap lower on earnings. We've come up, tapped it 1, 2, 3, and we're starting to roll over. So this is certainly at risk at the moment of failing once again. And for the near term, even if we're looking at sort of pre-earnings price action, it looks at risk of pulling back. A break through that 266 level would be required to give greater confidence that the bulls are in charge once again. And certainly if we're looking at this in terms of price action, you can see this lower highs, lower lows, this gap lower, and the rebound looks like a retracement of this sell-off from this peak here. So I'm going to put that fib on and see exactly where we line up. So it's above the 76.4. It looks like below. Looks like it'll probably be above the 61.8. Yep. So somewhere in the middle of the two. So in that deep fib zone, we've tapped on that sort of window on 3 occasions, and now we're starting to roll over. So certainly I would say this stock is at risk, as the company needs to prove that they should be valued as one of those big tech stocks that does continue to grow, and the pressure from those activist investors to really focus on profitability will provide significant highlights when it comes to the likes of earnings per share. Keep an eye out, of course, on what they're doing from the AI perspective. And finally, I wanted to bring up the numbers for Dell. Dell primarily focused on your computer solutions, but also on their chips. So they have got access to demand from the sort of AI side of things, but they've also got the expectation that we're going to see people rolling over their products sooner as they develop these new AI solutions and build them into your laptop or into your desktop computer. Once they provide these new products, there's an expectation that people will want to buy the new version of their computer more frequently and update accordingly. That's the same kind of expectation for some of the phone companies. Whether this actually comes to fruition really remains to be seen, because people need to see these significant developments come into play. Now, for Dell itself, the outlook on an annual basis points towards some upside over this year, but not necessarily too much. If you look over recent years, you're looking, say, 2019, we're at 735 on an earnings per share basis. And last year, we're at 713. So it was like 735, 8, 622, 761, 716, and 773 expected for this year. So essentially, we are expecting to see gains this year, but really the gains are expected to come in the coming years, 916 for 2025. So there's an expectation that we will see a really strong move next year. So the outlook is going to be absolutely key. If we don't necessarily see something all too impressive this time around, they need to really lay out a blueprint for why things are going to be so much better in the years ahead. In terms of revenues, 96.55 expected. You compare that to last year, it's a nice move towards the upside. And certainly when you're looking at the forecast for the coming years, we are expecting to see some nice growth up to 104 and then 110. In terms of the quarterly figures, we're expecting to see 168 here. Compared that to last year, and we're actually seeing a decline there, 174 last time around. But you could say, well, they're providing the basis for outperformance, because if you look at the surprise that we've seen each time around, I would say beyond, apart from last time around, you can see Q4 of 2023, 27% outperformance, 28%, 52, 53, 10%, 43. So they do a very good job of setting expectations and beating those expectations by a wide margin, certainly when it comes to earnings. Revenues 24.14 expected off the back of a 22.93 figure for the second quarter of 2023. In terms of market expectations, 4 strong buys, 13 buys, 4 holds. The recent projections from Wall Street provide some pretty bullish assessments. You can see here 34% higher, 27, 23, 65, 34, 38, 43. So Wall Street seriously confident that this company will move higher as we move forward. And there's an expectation that real growth on an earnings side of thing will happen next year. But as we've seen on a quarterly basis, they're very good when it comes to setting expectations that they can beat in a heavy manner. Let's get into the share price, and we can see in terms of the chart, the strong pullback taking place over the course of July in particular. Really, that's in line with movements within the tech sector as a whole. You can see here this internal trend line where support turns into support. Didn't really provide too much resistance on this occasion. But nonetheless, we saw that sort of breakdown with a break through this support level here at your 127.59 level. So that sharp slump, we've seen somewhat of a rebound, but many of these tech stocks are now starting to slow as we head into their earnings. Will we see a significant pullback? Well, perhaps. I would say that we'll feel certainly more confident with a move up through 116.59. So we're not too far away from it. Maybe this is just a pause before we continue to move towards the upside. Maybe we see these stocks essentially consolidate as they wait for their earnings and people wait for that next clue. If we're looking at previous earnings, you can see this massive collapse coming here, but that was off the back of a big run up. So high expectations on that occasion. If we look into the time prior to that, a sharp gap towards the upside. Remember, last time around, in terms of earnings per share, we only saw a mild outperformance. Prior to that, we were seeing big outperformance. So a nice big jump there. We didn't really see much this time around. We saw a big gap higher here. So certainly this is a stock that has the potential for a significant gap around this earnings report. At the moment, we're consolidating a little bit, but certainly a move up through 116.59 will give us greater confidence. But if we do see a gap higher and we see a move through that resistance level, we could see a continuation of that recovery that we haven't necessarily seen a huge amount of. And certainly given the fact that we are expecting, or markets are expecting, to see this company do particularly well over the course of 2025, then people really need to keep a close eye out on what the view is for the future, because maybe this stock is something to be holding for an extended period of time. And so they need to justify why that is the case and why Wall Street expect to see strong growth in the years ahead. As long as they can provide that positive outlook going forward, if we see another strong outperformance on earnings per share on a quarterly basis, which they've done time and time again, we could yet see a gap higher. And if we see a push up through that 116 level, we'll be looking for that 127 as the next port of call as we try to continue the recovery following a pullback that we saw over the course of June and July.